The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 4th terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do everything we can to have an extraordinary afternoon, an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances of what the bulls and bears are throwing at us. We'll look at daily, weekly, monthly, intraday charts, any time frame that you'd like, because this is a call-in talk show. That means I'm grateful for your presence as always, and I'm here to serve you. So feel free to pick up that phone, dial in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is terrific Tuesday, usually turnaround Tuesday. It ain't turning around just yet. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 43 points at 17,554. S&P off about 4 points at 2,094. NASDAQ down 12 points at 5,102. Russell off about 2.5 points at 1229. The DAX finished up 12 points. The FTSE down 2 for the day. Gold is up $1.20. Silver's up 4 cents. Light sweet crude up 73 cents, trading out at 45.90. Priceline having the biggest move dollar-wise as we speak right now, up $31.40. Just behind it from a dollar and bigger percentage-wise standpoint is Regeneron Pharmaceuticals up $31. Lending Tree, holy shnikes out there, up $31. That's a 37% move off of yesterday's close. IPC Healthcare up 35%. Abiomed or ABIOmed 12 up $12, 15, almost 16%. MicroStrategy up about $11, up 5%. Lead the charge to the downside, dollar-wise, it is Shire PLC off 6%, down 16 buckaroonies. Malincourt Publications up $13, that's down a little over 10%. AAC Holdings up $12, down 37%. So we've got a lot to look at out here. Again, 877-927-6648 if you'd like to call in the show. Let's begin by taking a look at, let's just go back to our non-populated 120-minute time frame chart here so we can get a feel. This is of the ES Mini. Of course, we just take a look at a chart like this. It doesn't have a lot of meaning to a whole lot of people, so instead we're just simply going to add to our palette a number of different tools. The first tool that we'll go ahead and add to our chart is what? Well, good question. I'll tell you what. Let's go add to it. Let's see what our choices are at the moment. Let's go add to it this little channel line that we've got out here. As we take a look at this channel line, here is the ES Mini 2-hour chart. And we can see at least along the top side of this chart out here, that's what I want you to pay attention. That's the yellow diagonal area. What you and I are doing is just simply connecting the tops of the opens and or closes. Doesn't really matter. At this stage here, what you and I are looking at is pretty much the open of the bar that began at 12 noon, July 31st. Its next touch point out here, in essence, running into the open at 4 o'clock in the morning. That was on August the 3rd. Really, that is our best diagonal area of resistance inside the ES Mini. We know that to be the case because we saw earlier in the day, from about 10 a.m. till 12 noon, we saw price try to break through that descending price channel. That is your significant level of resistance from a diagonal standpoint out here. If price can't bust it to the upside, pretty good chance that price will run down towards the downside. Now, on the downside here I've got what I'll call 4 co-located opens and closes to cement in the top side here. I've got a few along the downside, 1, 2, 3, 4 as well, maybe 5, 6. So this could be a pretty good bottom from a support level. That doesn't mean that intra-session or during a 2-hour period of time that you're not going to get a spike to the upside or downside in testing these barriers. What you want to keep your eye on is the actual close of the candle. And this is the range that we see from a diagonal standpoint that the ES Mini is trading into. What else can we put on? If we go take a look at some horizontal levels of support and or resistance here, what we can do is we can go take a look at our TAS market profiles out here. What are market profiles? They're horizontal levels of support or resistance that are taken into account volume considerations out here. The screen that we're looking at on my a screen that you're looking at right now is my chart of this 120-minute time frame, but utilizing what I have 3 different time frames to show us where the areas of congestion are. You know, picture yourself just simply driving down a road. At this stage here, buyers and sellers are driving down the road of this chart. You know, so you and I, we're just simply able to identify where there's levels of support or resistance. Now, support, those are really just congestion areas out here. In this case, what we know about the ES Mini is on this push lower, it's finding some pretty good support. It did so yesterday. You know, we saw intra-session. We saw a push below that solid blue line on my screen out here. If you look over into the right-hand panel in that little data box, you're going to see something that's in light blue that says BOTD. That's the bottom of the daily time frame. Says a price point of 2085.50. That is, or what should be, a support level. We can see that during the trading time period, it's been relatively narrow range out here. We can see that support has come in right at the bottom of that daily profile. So it's very strong support. We can also see, you can see the red horizontal lines going across my screen, and the bottom of the 120-minute time frame is at 2086.75. So we've got a couple different time frames lining up out there with support that's pretty strong support. Any move below that level, meaning a close below that level, we ought to see price get down towards the bottom of that descending price channel, as well as that little dotted green line on my screen. That dotted green line is the area where price has been most comfortable on a daily chart, where there's the largest number of buyers and sellers. So that's around the 2075 area. So any break below 2085, price should find some stability at that 2075-ish area. And if it doesn't, then expect to run down to 2060. Likewise, any move above the weekly market profile, that is the green box, that solid green line up at the top at 2104, that says that the ES Mini will move back towards its highs, maybe even as high as 2085.50. So in essence, we can take a look at this one chart, and what you and I can see is we can see multiple time frames to help us understand where different levels of support or resistance reside. Is there anything else that we want to take a look at on this stock chart? I would say basically, nah, not really. So let's go ahead and let's move on. Let's go take a look at the next area. You know what we didn't get a chance to do yesterday? Let's go do it today. And that was to take a look at each of the ETF structures for the indices. So we've been trading since 9:30. We've got what, 9:30, 11, 12, 1:30. We've got about, what, 3 hours in to the trading session here. It's about 1:14, a little shy of that. So as we take a look at that, no, that's about almost 4 hours in. Very poor on the mathematics out there. My apologies. But let's go take a look at what's gone on during about the first 4 hours of trading. Let's start off by taking a look at the Qs. In fact, let's switch back between the Qs, which we know that Apple is the numero uno, the largest weighting inside of the QQQ ETF series, and Apple certainly has been struggling during the day. But let's go take a look at the Qs. And what are they doing? They're trading at 111.34. Where's the level of support inside of the Qs? Well, one primary level is the top of the consolidation breakout. That's at 111.16. That's the high of the April 27th candle session. That high, 111.16, volume there, 31 million shares. Yesterday on the pullback, light volume. Only 25 million shares on that pullback. Today, something must be wrong with my screen. It says 11 million shares. We've been trading for nearly, I believe we've been trading for nearly 4 hours. And there's only 11 million shares on the Qs. The Q is not able to bust it down to get into the lower part of that range, meaning inside of that consolidation. Just simply a test of an area where it broke out of on light volume. The key today is going to be inside the QQQ series is 111.16 and that volume configuration of 31 million shares. Sure seems like light volume at the moment. That being said, let's go take a look at Apple. Let's go see what Apple is doing out here. In the case of Apple, finding support where it has most recently broken out. When we take a look at Apple, Apple gapped up. Sometimes Stevie refers to that as a gapple out there. And as we take a look at that gapple, that's on January 28th, that had volume of 146 million shares. Now today, that's pretty interesting. Apple's done 87 million shares. It had some real volume in the early morning hours. Let's go see what's going on with that volume. Let's go ahead and just put it on a 10-minute chart out here. Let's see if volume has dropped off, and it's dropped off in rather large numbers. So those that wanted to sell, looks like they got out between the time period of 9:30 and 10:50. We'll call it 11 o'clock out there. So they had about an hour and a half worth of selling. Now we've seen that taper off out here. And as we switch back to the daily chart, it looks like if this volume here keeps up, Apple's just really coming back to a breakout area on light volume. Now, gaps are your friends out there. Don't be afraid of gaps. Learn how to use gaps out here, because gaps, in essence, are an area where a market typically breaks out. And when price comes out to those gaps and it tests it on lighter volume, and you like to see tests of like 2, 3, at least 3, you prefer to see at least 3 tests. If you see 3 tests of a gap and it holds, that tells you you've got a strong area of support. Now, as we speak right now, Apple or Gapple is trading inside that gap, because you see that gap, it runs from the price period of 115.31 down to 112.48, and the low of that gap, meaning the high of that session where we saw a breakout from, which was from the trading day of January 27th, was at 112.48. That has not been tested. You know, you like to see these gaps in essence kind of close, because the expression would be that the window, because a gap is nothing more than what the Japanese candlestick charters, those that were coming from the dojima in the rice, where the rice exchanges were, that in fact they would be saying that this window would be repaired. At this stage here, the window's not repaired. There's still a little draft in there, and we'll see what that means. What does it mean as we speak right now? Apple, 87 million shares, coming back into 146 million shares. It could, if volume accelerates, take that area out. Otherwise, Apple just simply coming back to a level of support. And in essence, all the King's men and all of the other troops out there, that's why we're seeing inside the Qs out there a pullback, even on light volume, even with what is pretty decent volume at the beginning of the get-go inside of Apple. Now, if we take a look at what else is going on in the ETF structures, let's go take a look at the Russell 2000, the IWM out here. What do we know about the IWM? Well, it gave you a nice little Gartley buy pattern out here. It made an A to B equals CD to the downside. You might say, what is that? And so Stevie will go ahead and show you. Let me go ahead and first turn off these Fibonacci numbers out here. We'll go ahead and take a look at our A to B equals CD pattern. We'll turn on that tool. It's referred to as the lightning bolt, and we just simply take a look at swing points. Boy, in about 10 seconds, I can't tell you exactly what that is, so we'll have to do it when we get back from this break. You got the IWM trading out at 122.09. Thanks so much for joining us. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 30, S&P down about 1.5 points. You know, instead of showing you the A to B equals CD on the ETF or the IWM, and we'll switch back to it, it never really completed. It completed earlier in the day of that session, earlier in the morning before the IWM actually opened up for trading out here. And that's where utilizing the futures contracts is really helpful if you're a person that is trading those ETFs, whether it's a single, double, triples. You really want to be able to have access to what's going on inside the futures contract. Let me show you here. Now, what I want you to notice is this day right here of July 28th. When you take a look at that bar out there, that's what's referred. It's a bullish reversal signal on two fronts. Number one, it is a bullish bull separating line out here. See how the market had well, this is the Russell. We're looking at the actual Russell 2000 indice out here. I was going to go to the futures contracts. Let me do that. But nonetheless, on the on the Russell itself, you can see that key reversal session as well as a bull separating line. But give me a moment here. I can pull up the Russell. There we go. I'll just go with this version of the continuous contract. Now here you'll see the A to B equals CD. You might say, what is that? And I'm going to explain it to you. What the market tends to do is it tends to work in make these movements that look like a lightning bolt. And we just simply label them with 4 letters, A, B, C, and D. And if we take a look at it, you're just looking for a swing point. You say, Steve, what the heck is a swing point? It's looking at any stock chart out here and identifying where you see a significant change in trend. So with regard to this, we're going to come all the way back here to the June 23rd, June 24th time frame. You can see where the high was made. We can go ahead and be exact out there. I'll just open up my data window. We'll see where was the actual high. You had 1292.30 and 1292.30. They're both the actual same high out there. So it doesn't matter which one we use, but that's going to be labeled as our A point out here. So we'll go ahead and select that. Then we take a look and we look, okay, where does the market make a significant change in trend on the way down? Well, that's pretty clear. It's right down here on this day on July 8th. And then what does it do? It goes ahead, and it's just like that movie with Peter Falk, what was it, Father-in-Law, when they were talking about serpentine out here. So picture Peter Falk running across the chart out here doing his serpentine move, and his serpentine move would take you right up here to where we see that next change in trend, and that was July 16th. That becomes your C point. A to B equals C to D. All we're doing is taking a look at that measurement, price measurement along that A to B route to give us a price projection of where price is headed to. There is no better tool that I am aware of that exists that helps you identify and project where price is headed to. If you are somebody that wants to be able to project where price is going on an instrument that you're trading, you want to be able to create an exit strategy. And folks, I don't know any business school that you could go to. You can go to Wharton, you can go to Harvard, you can go to the School of Hard Knocks. I promise you, they all teach you the same thing, and that is have an exit strategy. And the easiest way to do that is to go ahead and use this lightning bolt tool. Now, 40% of the time, the market's going to complete a 1-to-1 A to B equals C. That's what I teach traders in my workshops about this pattern, how to actually master that C to D leg. I say let the market do 75% of the work for you. I'll teach you how to master the last 25%. Now what we have here is we've got a confirmed A to B equals C. We've got a bounce that is in place out there. Let's go back and take a look at the ETF, the IWM. And that says, when we take a look at it, there's really, and that was a Gartley buy pattern. I won't get into that for the moment, but on any A to B equals CD, you're just simply going to measure from top to the bottom and try to identify where is it that price is going to move to. Look, there's always 5 outcomes of this pattern. Outcome number 1 was achieved right here on the day of July 31st. That was making what we like to refer to as a dead cat bounce by getting back to the 0.382 retracement. You're going to say, what the heck is that technical term that you just threw out at me? A retracement. It's a ruler that we measure between swing points. In this case here, it's our lightning bolt pattern. And that ruler only has, from a retracement standpoint, that means moving within inside that zone, only 3 numbers that you and I really look at: 0.382, 38.2% of that move; 0.618, 61.8% of that move; and 0.786. That would take you to 127.01. Level 1 has been attained. What you and I know right now is that today's pullback inside the IWM, I must be seeing things, but it's only 11.6 million shares. 11.6 million shares. Shoot, it made a high on July 31st with 32 million shares. It moved higher with 29 million shares, where it's trading into on July 30th out here. Yesterday, at least, it was 34 million shares. You're talking about mega light volume on a pullback inside the IWM. Looks to me like this could be making a new A to B equals CD to the upside once it finds a little bit of stability here. Well, if that's the case, that says, and remember that figure of 125 and change out here. Let's go see where that A to B equals CD could actually take you to, if in fact that forms. We'll pull it down just, well, I can't pull it down a little bit further out here, but that says, hey, if today's low so far is it 126.20. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I have a couple of questions that came in our Tiger's Den out here. One was if I could take a look at GoPro. The other was for the Dow. Let's take a look at GoPro first here. And let's go see what it is that we know as we take a look at the ticker symbol GPRO. We just took a look at that lightning bolt pattern, that A to B equals C to E. And we can apply this to GoPro. We take a look at its swing point out here. That's going to be the trading day. In fact, let me turn this off. Let me clean this up just a tad for you. Let me turn off our TAS market profiles. There we go. It's nice and clean. Our A point, by the way, and I'll pull this back so you can see why we chose that. That's where we saw that big change in trend that took place inside of GoPro March 10th. And that low out there was $37.13. The next significant high that we see, where we see a change in trend, well, that runs right out here to the day of June the 8th. Now, the volume on that day, if you look over in the left-hand panel, little box out there, you're going to see 7.1 million shares. What I want you to focus in on is what kind of volume took that out. So we're just going to simply move all the way over to the right. It's this candle session right here from July 21st, and it was 24 million shares out there. You pass a B point with volume. That's accelerated price. That's wide price spread-ish, so to speak. You get above a B point with volume. What it does is it sets up a confirmed A to B equals CD pattern. That says that GoPro is headed to 73.46. I would make the argument more likely that where price will head inside of GoPro is up to the $80 even Steven level. Take a look at that lightning bolt pattern. If we go from its highs out here, all-time highs inside GoPro, that took place on October 7th. That was out at $98.47. You come all the way down to that 37-cent level out here, and you will also see at that $73 mark, you'll see a 0.618 retracement. So it ought to find some pretty good agitation between 73.46 and 75 bucks if it's moving in there with a wide-ranging bar, and it's also doing it sooner than later. That's when it can go ahead and make that move up into that $80-ish area. That's what's going on GoPro as we take a look at it. If we go take a look at wave counts out here, we're going to see that on its most recent pullback after it made Stevie's favorite pattern to identify tops and bottoms because it has worked forever on all time frames out here. Well, in this case here, if we take a look at GoPro, it made that nice little evening star formation reversal signal. That took place on the trading day of, give me a moment here, that was on the trading day of June the 10th. Goes ahead and makes 4 wave counts to the downside on its way back up. It just simply needs to be able to clear resistance out of it. That means get above this high from July 24th. If, in fact, GoPro can do that, get above that high from July 24th, she'll go ahead, or he'll go ahead and make that move to the $73 to $75 range out there. Hope that helps out JNJ. I believe that's where it came from, inside of our Tiger's Den. The next question out there was, Steve-O, let me go find it here. Would you kindly show us Dow Jones Industrial Average as you see it? Why will this pattern of lower highs not extend lower? Many thanks for your review. Well, I never said that it wouldn't extend lower out there, so that is a presumption. However, let me take the Dow and let's go bust it apart and see what the likely outcome is. The first place that you and I are going to start inside of the Dow is with this summation index. So as we take a look at it, it's flirting with trying to get back above the 0 level. Probably just needs about 3 or 4 additional advancing issues out here to be able to get above that level. And if it can do that after getting back below 0 yesterday, what it would say to you and me is that it really is a complex structure. And what that complex structure says is that the sellers really never had control of the Dow. Now, in the case of the Dow, one of the things that it hasn't done in quite some time as we take a look at the summation index out here, as we take a look at the price oscillator, and I just take you back into that October time frame, October of 2014, when nobody out there, they all thought that I had lost my marbles when I was telling you the market is going to make a significant bottom. The market's going to make a significant bottom. Well, one of those patterns that took place inside the Dow, when we take a look at its oscillator out here, was it was making higher highs inside that price oscillator above a very key level out here. And that key level was the promise of future higher prices. Fast forward to what you and I just went through here over the past couple of weeks when price made a higher high back here on July 20th. And what was taking place was that price oscillator was also making a higher high. We above that real key level out there. We haven't seen that take place since October of last year. Now, look, we've seen a pullback down to an oversold level. We saw the same thing take place out here back in December of 2014. Of course, the difference inside this October timeframe was the market just simply continued to move higher. A lot of small-bodied candles all the way up into that high on December the 5th out there. But as long as the Dow can get above 0, what it says, and you've got to take this one step at a time, is that price ought to at least be able to get back to the 17,855 level, maybe even 17,979. And I'm not saying that the high that came in out here on July 20th will get taken out. I have never said that. Never have I said that. And I'm not going to say that right now. What I will say with regard to the Dow, and each of these indices is going to act a little bit differently, I will take you over to this chart here that you're going to take a look at on Tiger TV. This is the Dow's 82-year seasonal average. That means that Stevie has taken 82 years worth of data and averaged it by day and gone ahead and converted it to the actual trading calendar in 2015. And what you're going to notice out here is that on average, the high that the Dow is supposed to make, it is not sell in May. It is called sell in July. Only nobody can really come up with a really good rhyme for sell in July, go away. That doesn't even make any sense out there. But as we take a look at this, the reality is in that unfavorable seasonal cycle, that's a 6-month time period between May 1st and October 30th out here, the Dow typically makes its high on this day right here, July 20th. There's also another high that it makes right back here on around May 18th. Keep May 18th and July 20th in here. And we'll go take a look at what the Dow actually did was it made its high not on the 18th. It made it on the 20th when it got up to, this is May. It made it at 18,350. The 18th, it was at 18,325. Not too bad. We'll go ahead over 82 years. We'll cut it some slack to be off by just a couple of days. Remember I said July 20th out here. We'll take a look at the high that we've seen so far in the Dow, July 20th. Come back here and take a look at this seasonal chart. Not too shabby as we speak. Now, what does this chart tell you and I? This chart tells you and I that there's another high coming at us. And that next high is not until several weeks from now. So, that being said, on average, if in fact this price oscillator inside the Dow can get back above the zero line, if the buyers can actually regain control, I can't tell you whether or not the highs are going to be taken out. What I can tell you is that another run into some high going into the middle of August, towards the third week of August, is nothing more than normal. Nothing more than normal out there. So that's one thing that we want to pay attention to. Of course, the Dow is going to go ahead and need some help from its friends. And boy, it is getting help from its friends, and that's called the New York Stock Exchange. Many out there are trashing the New York Stock Exchange. I can't understand why. Because the New York Stock Exchange, coming off of that bottom out here, back from the day of July 27th, shoot, its price oscillator has been above zero all the way. It has not been down below zero. Yesterday, it was tested. It was rejected. You've got an inside day going on as we speak today. An inside day basically says that what the New York Stock Exchange ought to do is just simply go ahead and continue to move higher out there. And if we do that, that says that in the New York Stock Exchange, it ought to go ahead and lift up the tide. And ought to lift up that tide and move it on to that descending price channel out there. That's that yellow diagonal line. That's right around the price level somewhere between 10,947 and 11,032. So what I will tell you, even though Apple, okay, it's Apple that's being the one that is kind of crushing, you know, the NASDAQ composite. The NDX price oscillator, I can't show you here, but I can tell you, because I do manual calculations on it, that it's actually above its zero line out there. Now, I don't know what it is today. I don't have the reading as we speak right now today. I will know that in the morning. But, you know, the NDX 100 as of yesterday's close was above zero, just like its brother, the New York Stock Exchange out here. So it is not, doesn't, you know, even though people want to say maybe that sellers have control, it's not really showing through as we take a look at it. And I'll just simply go with the law of averages out here. And that is that combined with what it is that we're looking at here says that prices move higher. Does the Dow take out its highs? I don't know. Does it move higher before it moves a lot lower? Chances are the answer to that is yes. If we go take a look at your favorite volatility index in mind, the VIX out here, what we're going to see is that it's well below the 50-day exponential moving average. That's $13.93. You're trading at $12.67. That says you've got plenty of liquidity inside of the market. That's how Stevie takes a look at it. If we go take a look at your favorite currency pair in mind, that's the euro, Japanese yen. What we see out here is it's trying to continue with its rising bottoms pattern out here. It wants to get back to that 137.79 area. And if it can do that, well, that ought to be enough liquidity to help push these markets higher out there. Maybe it's not today on Turnaround Tuesday. Maybe it's sometime tomorrow. Maybe it's not at all. But that is what the tools that we are taking a look at show us. If we take a look, I haven't looked at currency pairs. Early in the day, I posted this chart out here with regard to the Aussie versus the U.S. dollar. Let's go ahead and take a look at that because, if you trade currency pairs, this is one that you absolutely want to go ahead and keep an eye on. Why is that? Well, number one, this thing has been moving lower, and it's moving lower into an area of what should be really strong support. Now, this is the chart that I had posted earlier in the day. And earlier in the day, what I suggested was that the Australian dollar was about to run into resistance out here. Why? Just take a look at that nice descending price channel out here that began on May 14th. Remember, we started off the show taking a look at this on a 120-minute time frame. You can use this tool on all time frames out here. And I can't tell you why that acts as support or resistance. In this case here, it's PS, de resistance out there. That has, and you've got a nice wide-ranging bar moving into it. If, in fact, the Australian dollar, this is a daily chart, if it doesn't reverse from here, and what I mean by that, what I really meant to say is if it can't take out that descending price channel, man, it tells you just how strong that channel is. But likewise, there's another channel that could be extremely strong as well, and that's this one. Let's go take a look at the quarterly time frame. And that quarterly time frame takes you back into the lows back in April of 2001. And prices, well, I got to turn off that price channel there. Let me see if that'll do it. Will that do it? No, we don't want to turn that one off. We want to turn this one off out here. And there's your rising price channel inside of the Australian dollar. So what that tells you and that tells me is if on that daily chart, that descending trend cannot get taken out, the Australian dollar is going to head a bit lower. Where's it going to head to? Right around 70 cents, 0.7094 to be exact, where it'll run into the 0.786 retracement and it'll run into that rising price channel. Doesn't mean that it can't break it. But it does mean that that is a logical area of support. And that could be significant, major significant support inside of that currency pair. So you want to keep your eye inside the Australian dollar. Remind me from time to time. We'll go back and take a look at it. Let's go take a look at some of these stocks that are moving out here. We've got the Priceline, Lending Tree, Regeneron. Let's go take, well, we took a look at Apple earlier. Let's go take a look at Priceline. Let's go see what it's doing. Up 34 bucks. It looks like, what the heck did I do? Did I delete the chart? Oh, man, that means it's no problem. I can do that, but it means I would have lost some data out here. My, how I hate to do that. Oh, well, such as it is. Priceline, we don't want to take a look at Priceline on a 30-minute chart. Let me go ahead and put that back up here, and we'll just go ahead and we'll turn some tools on. Apparently, I was not watching exactly what it was that I was doing out here. But let's go take a look at Priceline. Let me do one more thing out here. Let me go ahead and get a style template that might be helpful. We'll call it one radio. It's got a bunch of different tools on here. Hey, how about that? It pulled up Priceline. Wow, this is interesting. Now, Priceline is trying to take on, oh, come on. It's trying to take on a swing point here. I guess I shouldn't have done that with a minute to go in this, but it's trying to take on a swing point here from back in May, and it looks like it's actually doing it with volume, but my cursor is basically frozen. That is a problem out here because it means I'm going to just switch to a different area of the charts. Let's try this. Let's come over here and try to take a look at PCLN. Only you don't want to look at it on a quarterly basis, so we're going to go ahead and change that to the daily time frame, and let's just yeah, it's the swing point from the trading day of May 6th out here. Let me see if we can get some volume on this chart and see what it is doing. There we go. The volume on that trading day was 1.2 million shares. You've done 662. So you're trading into it with some light volume, and you can see it's also run right into resistance. We'll call it the tops of these candle sessions from May 4th as well as May 6th. If Priceline can close above 1280.97, that'll be very impressive. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 70. S&P is down 6. Another little bit of a leg to the downside. Now, if you take a look, if I were to go back, if I can find that, give me a moment here, and let's just go look at that 82-year cycle average out here. Really, that's what it calls for. You can see right here, this little less leg out here. It says that really the next 2 days, or August 5th. Today's the 4th. So August 5th is really, if we take a look at what the Dow does on average over the course of the last 82 years, says that on August the 5th is when the next little low comes in out here. That's where you're taking a look at Maybe it's this right here. It's probably this point right here, August the 5th. So that's what happens inside of the Dow on average during the 82-year period of time. If we take a look at a couple of stocks also that are moving, let's look at some things to the downside. We've got Mallinckrodt Publications out here. You've got some You've got some major volume to the downside today, 3.6 million shares. The air has come out of this. Now, unlike Apple, where it was trading into a breakout area, there is no such a thing inside of this stock chart as we take a look at it on a daily basis. Instead, this thing has got a high volume bar all the way back here in the August 2014 time frame. I would show you exactly what that is, but my system is misbehaving out there. It's penalizing me for having deleted those charts out there. So I won't, I could do this probably. I'll just delete it again. And let me just simply build a new one, and I won't put all those different tools on there. Yeah, that's what I'll do. I'll change it this way, because what we didn't get a chance to do is go take a look at the SPYs and the diamonds out here. So we ought to at least do that during this last 2 minutes, just so we can get a feel for what's going on volume-wise and so forth. Let me turn the volume on this stock chart out here. The SPYs trade out at 209. And change. Give me one moment just to do that. Let's see how this works here. There we go. Looks like I've got the free reign now. Just have some of the tools turned off. So from just simply strictly a volume perspective, today so far in the SPYs, 44 million shares going into the breakout of 123 million shares out here on the trading day of July 28th. This really smells like a retracement and setting up an A to B equals CD to the upside. If we take a look at just simply this last leg, maybe it's not going to let me do that. I would be going from that low out here from what looks like July 27th or 28th. My apologies, folks. It's not letting me do that on that page out there. Man, that's a bummer. When your tools don't work, I'm going to try it right here on this one, see how this works. SPY. See if I can get that to work. If not, I'll just tell you a good story, right? I know you called in or you're listening to see the story of the markets. There we go. Retracement levels out here inside of the SPYs. If it can muster up some energy, pull back to 208.24. It's 0.618 retracement is not at all out of the question. But there is no volume inside the SPYs on its pullback as we speak today. Maybe it'll go ahead and pick up volume during the show, the next show, David White show. Maybe it'll do it during the 3 to 4 time frame during the Tom O'Brien show. But as we speak right now, it just ain't so. If we go take a look at the Dow Diamonds, DIA, and we see what it is doing, it's pulling back. It looks a lot worse than the other three indices, way worse than the IWM. The Dow trading inside that hammer candle that had volume of 7.7 million shares with 2.4 million shares today. Shoot, even if we go take a look at the swing point where it broke through that hammer candle on July 27th, that's got volume of 5.4 million shares. You've got a pullback going on simply on light volume. Folks, stay tuned because the Power Trading Hour is up next with your lovable, squeezably, huggable, soft host, Mr. David White. After that, we got the Tom O'Brien show from 3 to 5, and Andy Heck, like Dave Mason, he's going to bring it on home to all of us. Take care, folks. Have a great Tuesday. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.